Hi, Assalamualaikum. My name is NURSHAFIQAH binti Azam. Now, I will explain the use of purpose of the client account under Rule 57 of Acta 242 for the question 2. Firstly, the main purpose of a client account is to keep client's money separate from the firm-owned fund. This means that any money received from client must not be mixed with the company operations or personal fund. By doing this, the client money is properly protected and clearly identified. Secondly, the client account is used to safeguard client fund from misuse or misappropriation since the money is kept in a separate account. It reduces the risk of the funds being used for unauthorized purpose. This provides security and confidence to clients that their money is safe. Next, the client account ensures that all funds are used only for authorized client purpose. The money can only be withdrawn or paid out according to the client instruction or for transactions related to their matters. This helps maintain proper control and prevent any wrongful use of the funds. In addition, the use of a client account promotes transparency and accountability. Proper record must be kept for all transactions involving client money. This allows for easy monitoring, auditing, and verification, ensuring that the firm acts responsibly and professionally. Lastly, maintaining a client account is a legal requirement under Rule 57 Acta 242. Compliance with this rule ensure that the firm follow professional standards and legal obligations. It also helps put trust between the firm and its client. In conclusion, the client account plays an important role in protecting client funds, ensuring proper use of money, promoting transparency, and maintaining compliance with Rule 57 Acta 242. That's all from my part. Thank you.
Assalamualaikum. My name is NAZIHAH binti ROHNI. I will be continue for this part. For this part about question 3. Question 3 is professional indemnity insurance PII. PII is to ensure and protect the RV registered value against error, including the legal defacing cost. Compulsory PII under Act 242 and regulated by WOOK. Important of PII is ensure the legal and regulatory compliance, covers legal fees and compensation. Losses covered error for valuation reports and legal defense costs for court and lawyer.
Assalamualaikum. My name is SALINA binti WOOK, and now I will present about 5 types of misconduct and ethics register valuer and appraiser. Under Part IX of the Valuer, Appraiser, Estate Agent and Property Managers Act 1981, Act 242, strict ethical standards are imposed on registered valuer and appraiser to ensure professionalism, integrity and public trust. Firstly, conducting property valuation while acting as an estate agent is strictly prohibited. A valuer or appraiser must not value a property in which they are also involved as an estate agent, as this may lead to manipulation of property values for personal gain. Even within the same firm, no other valuer is allowed to conduct the valuation if one member is acting as an estate agent in the same transaction. Secondly, conflict of interest disclosure is mandatory. Registered valuer and appraiser must fully disclose any personal, financial or business relationship with client. This ensures transparency and allows client to assess whether the valuation opinion is independent and unbiased. Thirdly, professional fees must comply with Rule 48 under Act RES614, which prescribe a standard scale of fees. Higher fees are only permitted with prior written approval from the board, and contingent or conditional fees are not allowed as they may compromise professional independence. Next, valuer and appraiser are required to ensure accuracy of statement in valuation reports. All facts, assumptions, and market data must be accurate, verified, and clearly stated. Any misrepresentation, omission, or concealment of material facts is considered misconduct. Finally, due diligence in valuation report is essential. Valuers must conduct proper research, inspection, and analysis before forming a valuation opinion. Rash or careless valuation that result in inaccurate outcomes are regarded as unethical and a breach of professional duty. Thank you.
Assalamualaikum. Good day to Dr. Hafizah binti Ismail. My name is NURSHAFIQAH binti MOHAMAD ANUA. Today, I will explain 4 matters forbidden for advertisement for any registered valuer or registered valuation firm as provided under the valuer, appraiser, estate agent and property manager Akta 242. For introduction, under the valuer, appraiser, estate agent and property manager Akta 242, particularly under Rule 111 to 116, advertising by registered valuer is strictly controlled. This is because valuation is a professional service that affects important decisions such as bank loans, taxation and court matters. Therefore, advertising is meant only to provide factual information to the public and not to compete like ordinary business advertising. For the first matter, is a false or misleading advertisement. The first matter forbidden for advertisement is the use of false or misleading information under the Rule 111 and 112. A registered valuer is not allowed to exert record, qualification, experience or authority. For example, claiming to be the best valuation firm, guarantee 100% accurate valuation, or state that the firm is an official government when it is not true. Such statement can mislead the public and are against professional ethics For the second matter is a exercise or unprofessional self-promotion. The second forbidden matter is exercise self-promotion. Under the Rule 113 and 114 state that valuation service cannot be advertised using professional slogans or discount like cheapest valuation, fastest service guarantee or special promotion. This advertisement can make valuation service look like retail products and can reduce the dignity and professionalism of the valuation profession. For the third matter, is a comparison with or disparagement of other firms. The third matter forbidden is a compare oneself with or discrediting other valuation firms. Statements such as more accurate than other valuer or better than other firm are not allowed, even without naming other firms. Such as comparison are unethical because they can mislead the public and damage professional harmony within the industry. For the fourth matter is a testimonials and guarantees of success. The fourth forbidden matter is the use of testimonials or guarantees of success. Registered valuer are not allowed to claim that their valuation reports can guarantee bank loan approval or court decisions. For example, saying our valuation can help clients get loans approved is misleading because such decision can depend on many other factors beyond valuation. In conclusion, Akta 242 prohibit false information, exercise self-promotion, comparison with other firms, and the use of the testimonials in valuation advertisement. This rule can ensure that advertising remains ethical, professional, and protect public confidence in the valuation profession. That's all presentation from me. Thank you.
Assalamualaikum, my name is Salina binti Wook and now I will present about direct entry routes for local graduate candidates and overseas graduate candidates. In Malaysia, there are two pathways to become a registered valuer, one which is the direct entry route introduced by the Board of Valuer, Appraiser, Estate Agent and Property Manager. This route recognizes candidates' academic qualification and facilitates the transition from theoretical knowledge to professional practice. It is open to both local and international graduates with relevant educational background. For local candidates, the direct entry route begins at the SPM matriculation or diploma level in property-related fields. Candidates may then proceed to obtain a bachelor degree in estate or real estate management at a local university, which typically takes 3 to 3.5 years. This program provides comprehensive knowledge in valuation, property management, agency, law, economic and finance. According to Regulation 33, the board has stated the candidates must pass the first exam SPN or matriculation, intermediate exam diploma, final direct exam such as degree and final the test of professional competence CPC. After graduates, candidates are required to register a probationary valuer under the Valuers Appraiser, Estate Agent and Property Manager Act 1981, Act 242, specifically Section 17A and 18. Candidates must be at least 20 years old, possess good character, and be free from misconduct. At this stage, candidates gain practical exposure and hand-on experience in real property valuation work. Subsequently, candidates must sit for the test of professional competence (TPC), which assess their professional capability. The TPC requirements include a minimum of 2 years of professional experience, maintenance of a work diary and logbook, submission of experience record, completion of practical assignment, and attendance at a professional interview. This assessment ensures that only competent and ethical candidates are registered. Upon successfully passing the TPC, candidate may apply to be registered as a registered valuer under Section 17 of Act 242. After approval and payment of the prescribed fees, candidates must obtain the authority to practice ATP, which grant official permission to practice valuation in Malaysia. Next, for overseas graduate, the direct entry route is regulated by the Board of Valuers, Appraiser, Estate Agent and Property Manager to ensure academic equivalency and professional standard. Candidates must first pass the first exam requiring 2 A-levels within 3.0 or SPN. After that, candidates may pursue study at board-recognized overseas institution and pass the intermediate examination, which is equivalent to a diploma. Next, candidates must complete a board-recognized degree such as RICS, accredited or BSc programs in valuation, land and property management, which serve as the final direct examination. Upon completing academic requirements, candidate must register as a probationary valuer PV under Act 242 and undergo a minimum of 2 years of practical training in a board-approved valuation firm. Relevant overseas experience may allow a 1-year reduction subject to board approval. Candidates must then sit for the test of professional competence (TPC), which assess professional experience, practical tasks, ethics and interview performance. After passing the TPC, Candidate may apply to be registered as a registered valuer RV and obtain the authority to practice ATP, allowing them to practice valuation professionally in Malaysia.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Azrul by AZAHA, and today I would like to present about the route to become a registered valuer through working experience. So according to Rule 33(1)A, so for the first one, we need to have a first examination, which is like SPM, STPM or higher school certificate HSC. So for the example, Ali just finished his STPM and wants to start a career in property valuation. So with this qualification, he is eligible to begin the professional path. So for the next one, work experience route, which is we need to have 7 years experience of work, and we need to age more than 27 years old. So if someone 27 years old or older and has more than 7 years of work experience, they can enter through the work experience route. For example, Miss Siti has worked as an assistant valuation officer for 8 years under the supervision of registered valuer. So even without a degree, she has experience, and that allows her to join the professional valuation path. So the third one, we need to sit for the examination of RISM, and according to Rule 29 subsection 2 subrule 2, a board can appoint RISM as representative to conduct the examination. So for example, the next step is Ali or Miss Siti needs to take RISM exam. So passing this exam allows them to register as a probationary valuer PV and start gaining practical experience. So the next one is 2 years training or practical experience. As a PV, they will undergo 2 years of practical training, working under the guidance of experienced registered valuer. So during this time, they will learn to value properties like houses, offices and land, and they need to like doing the logbook, work diary and so on. So the last step is they need to sit for the test of professional competence, which is according to Rule 33(1)D, values examination. We have to sit for test of professional competence before we become the registered valuer. So after we complete the training and pass the TPC, it shows that we are ready to work independently as a professional valuer. Then finally, we become the registered valuer with the board of valuers, appraisers and estate agents, BOVIAP. So now they can now legally conduct property valuations in Malaysia. So for the conclusion, the route to become a registered valuer involve first examination, work experience, RSM exam, training, practical and also TPC. So these steps ensure that valuers in Malaysia have the knowledge and experience to work professionally. Yeah, that's all from me. Thank you very much.
Assalamualaikum. My name is NAZIHAH binti ROHNI. For this part, I will continue. For this part, explain about in Malaysia, the valuer examination is conducted by the boards and consists of 3 main stages, which is first, intermediate, and third, final or direct final examination. All examinations are written. The first examination is mainly for non-degree holders who wish to enter the property profession, such as valuers, property managers, or estate agents. The intermediate examination covers core subjects such as valuation principle, property law, economics, building construction, and land surveying. To become a registered valuer (RV), candidates must pass the final or direct final examination, depend on their academic background. After passing the examination, candidate must complete the test of professional competence, which is TPC, which includes a written report, case study, and a professional interview. In addition, RISM also offer professional examination for candidates with working experience, including graduate entry and Part 3 examination.
Assalamualaikum and good day to Dr. Hafizah binti Ismail. My name is NURSHAFIQAH binti Muhammad ANUA. For assignment part B, I will present the question number 2, which is focus on TPC, task on financial appraisal of property development. The task of financial appraisal of property development or TPC is prepared to assess the financial viability of a proposed development in accordance with the valuers, appraiser, estate agent and property manager Akta 242 and the BOVIA guidelines. The purpose of this report is to analyse site suitability, planning considerations, market condition, development costs and expected returns using reasonable assumptions and relevant market data to assist stakeholders in making professional and informed decisions. For item I, the site characteristics are analysed to justify the sustainability of the proposed development. The assessment cover the location of the site, whether urban or suburban, its proximity to economic centre and public facility, and its accessibility via highway and main roads. The land size and shape are evaluated as their affect building and building layout and development efficiency. Physical characteristics such as topography, soil condition, drainage and earthwork requirements are also assessed to determine construction feasibility and cost. In addition, land tenure status, restriction in interest and availability of infrastructure such as electricity, water and telecommunication are considered as this factor can influence market acceptance and development costs. Overall, the site is selected due to its strategic location, favorable physical condition, and existing infrastructure, which is and can enhance the development feasibility and future value. For item 2, is a planning consideration focused on compliance with local authority regulations. This includes the zoning and land use classification under the local plan to ensure the proposed development is permitted. The key planning parameters such as plot ratio, development density, building height limits, and parking requirements are analysed to control development intensity and avoid infrastructure overload. The approval process can include planning permission and building plan approval is also considered to ensure legal compliance. In summary, the proposed development can comply with planning guideline and meet the requirements set by the relevant authorities. For item 3, focus on the proposed development is explained in terms of its scale, type and concept, supported by a demand and supply analysis. The demand analysis identify target user and key demand drivers such as population growth, economic activity and employment opportunity in the area. The supply analysis examines existing and upcoming developments, competition levels and occupancy rates in the surrounding area. This analysis can help determine an appropriate development scale, competitive pricing and market positioning, thereby reducing the risk of oversupply and enhancing project viability. Next, I will pass to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURSHAFIQAH binti Azam. Now I will continue for the question 4, which is financial appraisal, including tax implications. Financial appraisal is an important process used to evaluate the financial viability of a property or development project. It helps investors and developers determine whether a proposed investment is financially sound before proceeding with the development. The financial appraisal, the project ability to generate acceptable and sustainable returns can be assessed. It provides a structured evaluation of whether the expected income is sufficient to cover costs and deliver long-term profitability. The financial appraisal includes a detailed analysis of development and operating costs, such as land acquisition, construction expenses, professional fees, maintenance, and management costs. In addition, project income from sales or rental activity is evaluated to understand the overall cash flow positions of the projects over its life cycle. To assess profitability and investment performance, various financial tools are applied. These include cash flow analysis to examine inflow and outflow, net present value or NPV to measure the present value of future returns, and internal rates of returns or IRR to determine the project's rates of return. This tool assists in identifying the financial feasibility and risk level of the investment. The tax implications are also a crucial component of financial appraisal, as they directly affects the net returns of the project. Relevant tax may include real property gain tax on a disposal of property, income tax on rental income, as well as reducing charges such as assessment rates, quit rent, and stamp duty. Ignoring tax-related costs may result in inaccurate financial projections and pure investment decision. Therefore, a comprehensive financial appraisal that incorporates that consideration is essential to ensure informed decision making and the overall success of a property development project. Next, for this question 5, which is disposal arrangement and marketing strategy. The proposed development will be disposed of touch of a combinations of sale and lease, depending on market demand and investment strategy. Selected unit may be sold to individual buyers or investors to generate immediate return, while other unit will be leased to secure stable and long-term rental income. Marketing strategy will include promotion, property agents, online property platform, and targeting investing. Competitive pricings and the strategies locations of the development will be highlighted to attract potential buyers and tenants, ensuring optimal return of the project. In conclusion, clearly, a comprehensive assessment of a property required careful considerations of both financial viability and appropriate disposal strategies in accordance with the principle of the Yellow Books. Financial appraisal, include of tax implication, is essential in determining the true profitability of an investment, as it enables informed decision making by accurately affecting costs, income, and net returns over the investment period. Equally important are the disposal arrangements and marketing strategy adopted to release the property value. Overall, the integrations of sound financial appraisal, prudent tax considerations, and well-planned disposal and making strategy form a fundamental basics of achieving sustainable and optimal outcome in property valuation and investment decision. That's all from me. Thank you.